Good everyone, Les here from BG Trading. Hope you are well. Today is 17th of January 2024 and I'll be analyzing the S&P SX200, the top 200 companies index in Australia, and we want to take a look what's happening, whether this correction could intensify, and we might see the index moving towards low 7,000s, or whether we're going to have a breakout to the upside. A lot of people, obviously, the market went up 12% in the last 2 months of 2023. And as I said in previous video, and I've been warning our community for weeks already about the potential correction, and didn't happen. Otherwise, that was exactly what happened. And then it's not even myself looking at it, is the strategy that we use. We call the BGS20 strategy, showing and pointing potential signs of reversal. We saw those signs of reversal 2 or 3 weeks ago, when we warned our members. And then now we want to take a look what's how low this so-called correction can go, and also a brief discussion about what's happening on the microeconomics as well, and that obviously has a direct impact on the ASX200. Let's have a look. I just want to remind you, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we avoid FOMO, and much more. Normally our trades chase 20 to 40% using that strategy. We do that with our VIP members. Safe, which follows the dynamic of the market 1 to 3 months, and that it's way better than obviously we call term deposit, which is a safer sort of investment type of thing. We don't believe that stock market is a investment tool for us. It's more like a trading, which we wanted to capitalize out of that, and then we invest into other assets like real estate. Anyway, let's jump straight into what's happening with XJO, the S&P SX200. As I said before, there was a very, very strong, like multi-year, like 2.5 years, we call hypothetical resistance level around 7,600. The stock market rallied really hard, about 12% in the last 2 weeks last 2 months of 2023, November and December. There was a remarkable rally after that very tough 2023. We managed to not only recoup our losses, but to lock in great profits as well. And as I said, as I always said to members, when you're looking at correction, there are ways to profit out of these corrections, and then they're using ETFs like a Bear or BBOs, but you gotta be really playing against your emotions, because and I mentioned on our VIP membership program how important is when the market tops up to look into hedge the portfolio with some instruments, essentially making money out of the fall, and that's what we've been doing now. Now, looking into this potential correction, we have already on S&P SX200 2.5% down. I believe we could easily find our way in between 7,200 and 7,300, and still be in sideways mode. Look, I prefer not to think that we're going to test 7,000, but that is a possibility as well, as the market is moving sideways. I don't want to play a doom view here, but you have to be prepared, and that's why we hedge. But the good thing is, hedging the portfolio not only give you a release the money from stocks that will most likely fall, as a result of this correction, but also that will provide you the ability to buy those stocks. First of all, provide you ability to generate profit out of this fall, obviously, but then you can buy the same stocks that you have bought before for a much lower rate. So essentially, if you go, give an example right here for instance, we've been trading Megaport, for example, a few times in 2021 and 2022 and 2023. See this correction here? I'm not saying that Megaport is a stock to buy now, just showing you how this correction is important. So by the time you're profiting, those stocks are still falling, you can buy them back at much lower rate. Paladin is a stock as well that it reached our BGS 20 target. We closed our position. We are very happy about 24% profit out of this position. Obviously, we always want more, but again, like we lock in profit, and as soon as it falls again, we go and buy for a much lower price. And that's how we make money as well, because you can buy the same units you have previously, and then spare part of the funds to allocate into other positions, or even take out of trading account and invest in a proper, let's say, investment asset type, you know. But back into the SX200, hopefully that makes sense anyway. Back to the SX200, as I said in a previous video, every time the stock goes up about 12-13%, which is a big rally, it comes down at least like 6 to 8%. As you can see here, back in 2022, then you can see here back in 2023 as well, down about 8% here, 6% down right there, 9% down in 2023, and I'm expecting at least 6 to 8% down. We're only 2.5%, so I think there's more downside to come. Also, there are some geopolitical concerns. The world is becoming less and less globalized, and the problem is they increase prices across the board, most of the goods and services, and that brings inflation back. I'm not suggesting the inflation will start going up again, but there is a risk over there, and with shipping problems, as you probably know, with shipping problems and companies sort of changing its route, they obviously not only affect prices of goods, but could have some side effect on overall inflation in the US and even in Australia here. It could definitely impact. But then inflation came a little bit higher than expected, but I don't think there was high enough for Fed to reveal its position of start cutting rates this year. There's a lot of going on, and we need to analyze January CPI, which will be released in February, and then based on that, we can make a more precise decision. Hope by then the S&P SX200 will be down around 7,200, which will make me a lot more comfortable to start jumping back into larger positions as we've done in November and December. So for now, if you are not hedging the stock market, I would just be watching. Obviously, this is not a financial advice. It's just telling what we normally doing, what we would do. We just watch on the sidelines, having small positions, because we never know. The market could just all of a sudden start going up again. But having said that, the chart formation is very precise and generally works very, very effectively. So if you haven't hedged yet, so we now about 8% profit on our hedge position, because we start building up a position right at the top there, BBOs. So now I would say it's a little bit tricky, but still I think the market will meet the SMA, the moving average of 250, and will sort of settle in between the moving average 40 and 250 days, bringing that to a technically fair price. At the moment, it's still at the FOMO levels, way too high. We don't want to get exposed to to many stocks on that particular thing, but we're still holding position in some stocks, but only smaller positions, because we have been locking profits all during December and January in anticipation of this potential correction that has just been confirmed. And and we expect further downside. Guys, I hope that was valuable. Let us know what you think about this correction, how low you think is going to go. I think honestly it will sort of try to find the ground around here, but it could come down to 7,000, even under, depending how geopolitical conflicts plays and how much investor sentiment will be affected by this kind of situation. I think that's the biggest risk. And obviously, just to remind, there's an election coming up in US this year, so it's always when election plays, there are a lot of volatility in the market. Okay, so just keep in mind that. Thank you very much for watching, and I'll see you in the next video. Bye.